The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
All right, stock of the day in the news this morning. Woodside, the company has signed a sale agreement for the long-term supply of LNG to Japan. It follows a commitment in February by Japan's largest power generation company, JERA, to take a slice of Woodside's Scarborough LNG project in WA. Under the agreement, Woodside will supply 6 cargoes of LNG per year over 10 years from April 2026. Let's see, the market reaction to that. Of course, energy stocks have been under a bit of pressure lately. Henry, what did you think of the announcement today? Certainly, Woodside share price certainly needs a bit of a boost, does it?
It does need a bit of a boost.
It's an accelerant.
It does need an accelerant. I guess, you know, it's if you charted Woodside against the oil price, I mean, that kind of tells the story, really. And this deal doesn't really change it. JERA is already part of the Scarborough. They put money in, as you say, earlier this year. So it's really kind of formalising that in terms of that offtake agreement or that sales contract agreement. The thing, I guess, that keeps Woodside in investors' minds is the dividend. You know, they've got an 80% payout ratio, and that is first and foremost what keeps people interested, because, to be honest, even when the oil price was going up, Woodside wasn't.
Yeah.
It really didn't seem to have the leverage that we would like. In fact, Santos was in the same LNG cargo ship as well. They were both struggling, even though we had oil at 85, 90 bucks a barrel. So, you know, it's questionable whether a sustained rally in the oil price will help Woodside. So, you know, you probably wouldn't sell it here. And you have to think, you know, I was talking about this a week or so ago, you know, BHP pretty much nailed it in terms of timing,
yep,
in terms of jettisoning that the oil and gas assets to Woodside. You know, so yeah,
would you be buying Woodside at these low levels?
I think there's still question marks about Scarborough. There's still cost blowouts. There's still regulatory approvals. There's still issues generally. I think, you know, if you were a holder, you wouldn't sell it, sure. But if you were a buyer and you wanted to leverage yourself to the oil price, I'm sure Andrew will come up with a far better way of doing that through the ETFs, and I'm just going to whack it over to him. But certainly,
so a hold.
It's a hold. Yeah. The dividend is strong enough to remain at a hold.
Okay, Andrew.
Technically, it looks ordinary.
Yeah.
And short interest, albeit off a low base, is actually also rising. So in other words, the people who think the share price is potentially going to fall are starting to load up into that. Nowhere near its peak, but I'll help me put my glasses back on, but it looks about 2% of the company is short.
Right.
So certainly that's unhelpful. It's trading well below consensus. Consensus is about 30 bucks. It's about 24, 25 at the moment. But I look at the PE, it's trading about 2 points above its peers. So it's a PE of 14 relative to its peers on 12. Earnings forecast to drop by 23% next year. I note that Meg O'Neill, the well-regarded CEO, has not been buying any shares.
Right.
So you'd sort of think if I thought, gee, that's cheap,
yeah,
I'd be getting stuck into that. However, Richard Goyder has been. He's increased his holdings over the last 12 months. Okay. Henry's right about the dividend, and certainly a lot of my retail clients that are looking for income, that's certainly up until, because they've just gone ex-dividend, that was one of their favourite ones. But the chart looks ordinary. There's lots of pressure relating to Scarborough, so it's a hold.
Okay. All right. A hold for it, but everyone goes, oil stocks, commodity stocks are cyclical.
Correct.
You know, buy them when commodity prices, oil prices are down, they're down, and everyone goes, ooh, maybe not. Could they go lower?
Sorry, how did that go again?
That's a woo.
Hopefully people got the screenshot.
So how do you pick the bottom of a cyclical cycle?
Well, you get a smelly finger if you do try and pick bottoms. So
right.
that's probably the first thing that you need to be mindful of. Family-friendly show.
Right.
To me, it's when people are just capitulating, and there is no capitulation at this stage.
Right.
So
there's no panic.
No. You want people just sort of, and with due respect to the media, you think back 5 or 6 weeks ago on that August, where $100 billion wiped off the market and red all over the screen. No one, I might add, by the end of the week went $100 billion wiped on and green. That doesn't help. But getting back to the question, you just want to see capitulation.
Okay.
We're not there yet.
So that's not there.
No, I don't think it's there. What I think you should do, though, is get a dirty great big oil tanker and fill up your petrol at $1.55 a litre, which I saw driving in today.
Yes.
That is, thank you very much. That's stimulus there. I mean, who needs a rate cut? If you've just suddenly saved 50 cents a litre on your fuel from not that long ago. So, that is part of the, I guess, part of the RBA narrative as well.
And will that feed back through into lower grocery prices and so forth? Because
No,
I know it won't. I'm playing devil's advocate.
Of course it won't.
And greedflation. But that's certainly a part. If it was prolonged, then in theory you should see. So again, it's almost like a de facto rate cut.
Yep, absolutely. Yep. All right, thank you, Jen. So it's Woodside, our stock of the day.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.